what's exceptional about this, and this is just completely mind-blowing from a traditional finance perspective, is he raises billions of dollars one day, goes and buys Bitcoin the next. He has a period turnaround of investing that capital. And so guess what? The very next day after he's allocated that capital, he can go back to the market again and say, hey, I'm back to sell another $1 billion of shares. It's like, hey, hang on a second, how are you doing this? Like, where are you investing that money? He's like, well, I've just gone and bought Bitcoin. The equities guys think, they're the rock stars, and it's like, they're not the rock stars. In the finance world, it's all about markets around the world. And the pool of capital, the depth, the breadth, basically everything runs on debt in our system. And, I don't need to talk to you about, what a fractional reserve banking system looks like and then the layers on top of it. But, the equities guys are the nice, shiny Hollywood types with the pop collars. And then the debt guys are the grunt guys that actually make things work and are the decision makers. And all you need to look at is, who Goldman Sachs has appointed basically head of their business for, the last 20 or 30 years. Typically, it's been a debt side guy rather than a bond, an asset equity side. So he's raising money, and they're not even charging him an interest rate to give him money. This is the mind-blowing thing. I'm like, oh my God.
Welcome, Peter Dunworth, to the Larpar Show, where we talk about what is money, what is coming, and how to protect your family. On this day, Wednesday, the 11th of December, 2024, and the Bitcoin price today is at $101,069. So, Peter, introduce yourself and tell us, how did you find Bitcoin?
Thanks for having me. It's great to be with you. A little bit about myself. I run a business called the Bitcoin Advisor, and I have the inglorious story that I love sharing of being told to buy Bitcoin by my brother when it was $3. And sadly, trained in traditional finance meant that there was a whole host of things that I had to unlearn before I could understand what Bitcoin was. And back in 2011, when he said, hey, you should buy some Bitcoin, I immediately dismissed that. I scoffed at it and I thought that'll never work. I went through the checklist of everything that everyone goes through in order to find Bitcoin. Typically, that'll never work. Governments will shut it down. Oh, there'll be a new Bitcoin, and then the submission to the fact that, okay, there really is only one Bitcoin, and this is where we go from here. So it took me about 5 years to really figure out what this thing was, and that was basically a free education from my brother, for which I'm forever grateful. That he was very patient with me, answered a whole host of questions, and sowed the seed for really understanding what this thing was. And then back in 2016, it wasn't apparent what it would become in today's light, but there was a spark and an opportunity, a sense of hope that this could be something that could redefine the financial system. And so we started advising clients on that in a family office that I ran. So I still do to this day, run a very small multifamily office. And in that role, I'm responsible for advising some of Sydney's wealthy families on how to invest their money. And this is a role that I've done for years and years, been in finance for the last 25 years. But in that capacity, there is the responsibility to find investments and advise across all asset classes. And so that means advising on absolutely everything from stocks, bonds, commodities, property, to alternatives as well. And this is where Bitcoin has, I guess, reared an opportunity for those families to take advantage of. And the rest is history, as they say.
Yeah. We always, a lot of people, as we say, as even myself, I heard about it years and years ago, but I never took action on it. Yeah. I came across it when it was like $30, and friends of mine were sitting beside me buying it, and I was young at that stage, and I had a bit of spare capital, but I didn't do my work, unfortunately. But it is what it is. I'm in now, and it's okay. The future is bright. We have our insurance, and let's jump into a little bit about what the year's been like with the launch of the ETFs. Yeah, in January 10th. How has it been moving along? We can see institutional adoption now happening this year. I think there's some big things going to be happening next year. We can see things anyway. Yeah. So would you like to just jump into that? What you've seen from the beginning of the year? Give a bit of a roundup of what's been happening for the whole year.
I think there are probably three or four stages to this year that we can talk about that sort of defining moments. And it feels like that old saying that, years happen in weeks and weeks happen in years, that, we're in a defining year for Bitcoin. This is really the year of institutional adoption. That really kicked off on the 11th of January with the submission and the kickoff of the ETFs on the US markets. All of a sudden, you had the biggest capital allocator in the world in Larry Fink and BlackRock now having an ETF, a tool that they could sell Bitcoin with. And if we focus on that for just a moment, the ETFs have been a raging success in any metric that you look at, in dollar flow in, funds under management, capital growth, the ability to spin off a whole host of products on the back of it. This has been the best, the most successful ETF launch that Larry Fink's ever done. And that has basically flowed through this entire year. So that is one of the major themes that's happened this year. There are some things that have built on the back of that, like options launching last month on the back of that, which I think is a little bit overrated, the benefit of that. But that is one of the key defining moments of the year. The second defining moment of the year, I think, is the bull run that basically kicked off and then stalled in March into the halving. We had obviously a huge event in Bitcoin terms that we had one of the things that happens every 4 years in the halving. So the mining rewards went from 6.25 to 3.125 Bitcoin every 10 minutes, or 900 coins a day down to 450. In Bitcoin world, not TradFi world, that is a milestone year in any benchmark when it comes to Bitcoin. Fast forward a little bit, we had obviously MicroStrategy was first to market as far as an institutional grade product of Bitcoin. That looked like in January that would be superseded by the ETFs. The ETFs came along, sucked a lot of oxygen out of the room for them, and then all of a sudden the halving concerns came along, and a lot of, I think, the institutional investors who haven't been in Bitcoin a long time started worrying about what would happen with price and the rest of it. And then that opened up the opportunity for MicroStrategy to really build a traditional financial market product on the back of it. And I think in TradFi terms, the story of the year has been MicroStrategy, the best performing stock in the world, best performing stock in the S&P 500, and then what he's been able to do and create and achieve with respect to financializing the volatility of Bitcoin through MicroStrategy is going to go down in history as one of the greatest financial engineering concepts ever created. And this is where I don't think he gets enough credit for, because in order to understand what he's doing from an institutional or company perspective, you really need to understand the primitive with which the tool he's working with, which is Bitcoin. And traditional finance doesn't really understand what that primitive is in Bitcoin. And they just look at the financials and think, oh, well, none of this makes sense. We're just going to write it to zero. And this is the glorious thing that I look at. I think, a market is made by different decision makers and capital allocators. There are people who are absolutely in the bag for that stock and are as rabid and hyper-focused as the Bitcoiners. And I guess to coin a phrase, which is one of my favorite about the Bitcoiners, psychopaths. There are psychopaths who are MicroStrategy fans who are just as dogmatic about the success of that and will never sell it either. And I look at this and I think traditional finance hasn't really come up against that type of shareholder before, not like that in this capacity. And so this is creating a dynamic that is just absolutely glorious to watch, understanding what happens with Bitcoin, that Bitcoin basically infects everything else. And Bitcoin is a constant and a hard asset, which when anything presses up against it, it basically gets crushed. And so I'm watching this slow moving train wreck, and sometimes it's not so slow. Sometimes it's a massive short squeeze like we've seen in the last few months. I'll get to that more in a sec, but the third thing that happened this year, which I think is enormous, like this is a seismic tectonic shift, this hasn't happened before, is the fact that we now have an administration in the US, which is basically the leader of the free world, is now supportive of Bitcoin. The implications of this can't be overstated. We have now an administration that is supportive of Bitcoin for the first time in its 16-year history. this is enormous. And what we're seeing on the back of, Donald Trump getting elected in the US is basically Bitcoin ripping 60% since that happened. And all of a sudden, there's a whole host of measures that are coming into place that looks like not only for Bitcoin, but for the broader crypto community. And that's not really a care for me, but it does support what we're doing as well. All of a sudden, we now have a supportive administration, and effectively the world police is now on our side when it comes to Bitcoin. And I look at who's lined up in that administration for it. You've got Trump, who's in the bag for it. He's got Bitcoin. His kids have got Bitcoin. His youngest has got Bitcoin. Howard Lutnick, the head of the transition team, has a big position on Bitcoin, hundreds of millions of dollars. You've got RFK Jr., one of his biggest investments is Bitcoin. I mean, the vice president's got Bitcoin. Vivek Ramaswamy's changed his asset management company to allow for investment in the Bitcoin ETF. I mean, I don't know what to tell you, but if you can't understand and see the winds of change that are coming down and what the effects on the price of Bitcoin are going to be when that administration is actually in, I mean, I'm at a loss for words as to how I can help you. Like this is one of the easiest things I've seen, with one caveat. As long as we avoid World War III, that's looks like it might kick off with Ukraine, Russia, and the Middle East, then all other things being equal, next year should be a milestone year for Bitcoin and that price appreciation.
Yeah, yeah, yeah. And it's amazing the way so many smart people that have done their homework on Bitcoin now are actually coming in to this administration, and the names that you were mentioning there. Yeah, these are all holders. They've done their homework on Bitcoin. They understand what Bitcoin is, truly understand what it is. Yeah. They understand that it is our insurance for the future. For if anything does happen anyway, yeah. Uh it is hope for their country. Yeah. They can see that. Yeah. They understand the money printer. They understand the cost of money. Yeah. They probably understand now because they have Bitcoin that all the other assets we were talking a few minutes ago about the cost of money, and compare what people need to be growing every year, year on year, that 20% number. They understand all that. Yeah. So I think the future is bright for Bitcoin, and it's only really starting, and there's so many corporations getting in. Even like this weekend, there's a big Bitcoin event in Abu Dhabi, isn't there? Bitcoin Abu Dhabi is on, and one of Trump's sons was up talking, doing a keynote on it, and he was talking about it, and loads of big names are over there, and they're talking to all the Arabs and the sheiks and everything. There's a lot of them there at the moment. Yeah.
That's a lot of capital to flow into Bitcoin. And if you listen to Dave Bailey, who's been instrumental in getting Trump across the line and speaking at Nashville and changing an administration to being anti-Bitcoin to being pro-Bitcoin, he's extremely bullish with the conversations he has and is exceptionally generous with his sharing of knowledge and the conversations that he has. That basically there's a lot of capital that's going to be allocated in the next 12 to 18 months. And one of the biggest things that I look at that I just don't think traditional finance really understands is that in Bitcoin, we have an asset that is really the ideal asset for Wall Street to trade. And in order for Wall Street to trade, it needs to get a lot bigger. Wall Street loves volatility. That's why they love MicroStrategy, and that's why they're going to love Bitcoin, because MicroStrategy is predicated on Bitcoin. But the really interesting thing for me is that this volatility created is all down to the instrument, the underlying, which is Bitcoin. And because of that volatility, that gives the opportunity then to have an asset, which, I love this argument that everyone says, oh, there's nothing with Bitcoin. There's nothing there. It's like, if you understand markets, that's precisely why that's the instrument you want everyone to trade. For the same reason that, people say, oh, you can't live in a Bitcoin, and they're trying to have a dig at you for having a Bitcoin. It's like, once you understand that that's the feature, not the bug, that's why Wall Street will make this the biggest financial asset to ever exist. This will be bigger than the existing market itself, because when they trade this instrument, this isn't going to kick people out of their homes. If we revisit the GFC and what happened there, if you look at the genesis of that problem of the GFC, that basically started when, and I'm not doing this to disparage Larry, I'm just saying in the context of history and what led to it, Larry Fink was responsible for the mortgage-backed securities market. What he did was he basically financialized all the mortgages in America and consolidated them, chopped them up, and sold them in tranches as financial products. However, someone had to pay that mortgage. And with the demand for that mortgage-backed security market, that led Main Street banks to go out and find poorer and poorer quality borrowers to buy homes in America. This meant that prices went through the roof, but the credit quality deteriorated dramatically because they were giving away those ninja loans, which were the no income, no job applicant loans. And so all of a sudden, you had all of this financial leverage in the system built upon people with poorer and poorer quality of credit quality. And the beautiful thing about Bitcoin is that Bitcoin can absorb an infinite amount of monetary energy or money. And there is no risk to Main Street because you can't live in it. You're not financializing it. And this is where this volatility is going to continue to trade, and Wall Street will be their new best friend. And I fully expect Bitcoin to go up 100 to 1,000x from here once Wall Street understand what that is and it trades. And government, I think, is going to be very supportive of that because it allows Wall Street to get their fix because they're effectively gambling junkies. And that allows them to get their fix on trading volatility. But it doesn't affect Main Street. It's not going to affect your home because now you're taking that speculation out of the housing market and putting it into an asset that basically no one can live in. There is the feature, not the bug.
Yeah, yeah, yeah. And the thing about it, it takes a bit of time to understand that and to learn about that. And that's why it has been taking time. But 2025 and 2026, I think it's going to be mental. Yeah. No, people better buckle up.
Learn quickly. Sadly, it
Yeah,
took me
learn
5 years
quickly.
to figure it out.
Fine.
Hopefully, there's a lot more resources today that allow you to learn faster than I did.
Yeah, find a good advisor or a good mentor and just get on the bandwagon and start learning. That's what we say, start learning about it first before you really start investing in it. Most people go do this the backwards way. Yeah. They come to catch the price, which we probably all did anyway. Yeah, at the beginning. And we make a few mistakes, but try and find a good mentor, yeah, or a good advisor and just start learning from them. Yeah.
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 It'll save you a
Regarding
lot
Mike,
of.
yeah,
I was
go
going to
ahead.
say that can save you a lot of what we call tuition fees. So, there's a lot of places that you can hurt yourself in Bitcoin, and particularly being a digital bearer instrument, having guidance in that space to avoid those pitfalls is really important.
Yeah. Yeah. And regarding MicroStrategy's strategy, okay, can you
Mm-hmm.
explain that a little bit? Yeah. How they're actually raising so much funds, just the people that don't know. Yeah.
Well, what they're doing is they're doing it two ways. Balance sheets, and without getting too technical, basically have two sides to it. There's assets and liabilities. And Saylor has created the ability to not only financialize the asset side of the balance sheet by issuing more stock, he's also financializing the liability side of the balance sheet by issuing convertible bonds, which really act more like an asset, but technically it's on the liability side of things. Now, what he's doing is he's basically going the stock market. He goes to the stock market on a daily basis or a weekly basis and says, I would like to issue more of my stock. And this is something that is really fundamental to understand, that in traditional finance, when you issue more stock, what you're doing is you're diluting your shareholders, which is a massive no-no. That's a really bad thing to do, because what you're doing is you're issuing more stock, and now there's more stock out there, which means you haven't created any value. You've just issued stock and diluted the value of the company. And most people hear this, but when he's going out and diluting his stock, he's actually selling more shares to market. But he then goes and within 24 hours takes that cash and goes and buys Bitcoin with it. So it's actually value accretive to the company And there are so many things in this which we could drill down on depending on how much time you want me to spend on this, that it just redefines finance. And on a really high level, the first is he's diluting shareholders, but it's Bitcoin accretive. So those two terms are literally an oxymoron. It doesn't happen in any other world or any other company in finance than the S&P 500, that you can dilute shareholders but still be Bitcoin accretive. That doesn't make sense. It takes TradFi a long time to figure that out. The other thing, and this is probably the more powerful thing, is when you raise money at the market, whether it's either side of the balance sheet, that's typically, and when you're raising billions of dollars, that typically takes years and years to deploy. When we invest in traditional private equity deals, alternative assets, things like that, you have what's called a J curve. And the J curve so happens is that, you invest for a 5 or 7 year period, because what they're doing is they're taking your money, they go and invest that money, but it takes them 2 years to fully invest that money. So what happens is over the first 2 years of that investment, that the actual investment has a negative return, sometimes to the tune of 20%, before it then starts kicking off the profits that you expect it to make and the capital gain. Now, what's interesting is that's a 7-year window and a 2-year negative return before it starts kicking off exceptional returns over a 5-year period. What's exceptional about this, and this is just completely mind-blowing from a traditional finance perspective, is he raises billions of dollars one day, goes and buys Bitcoin the next. He has a 24-hour period turnaround of investing that capital. And so guess what? The very next day after he's allocated that capital, he can go back to the market again and say, hey, I'm back to sell another $1 billion of shares. It's like, hey, hang on a second, how are you doing this? Like, where are you investing that money? He's like, well, I've just gone and bought Bitcoin with it. And now Wall Street looks at this and goes, well, that seems insane. And then a whole host of different arguments come up that, well, why is MicroStrategy trading at a premium to its underlying Bitcoin? And it's like, well, therein lies the feature, not the bug again. And so most people, and like I have conversations about this all the time, like I've got a whole host of mates who are TradFi guys, and I'm like, just to get them into the Bitcoin rabbit hole, I'm like, hey, have you heard of that stock, MicroStrategy? And they're like, nah, what it is? I'm like, oh, you should buy some. just to pique their interest. And once they've bought a stock, they know that, I know they'll go down the rabbit hole, and they're like, what do they do? I said, oh, they buy Bitcoin. And when I have the conversation about they're trading at a multiple of net asset value, meaning they've got, call it, say, for instance, $40 billion of Bitcoin on the balance sheet, and they're trading at a $100 billion valuation, they look at me and go, well, why would I buy? Why don't I just go and buy Bitcoin? It's like, you can do that, but guess what? He's going and selling, when there's that 2.5 times premium, he can raise $1 billion, go and buy $1 billion worth of Bitcoin, and it adds $2.5 billion to his share price. So I look at this and I think this is really a money glitch. And that's on the equity side of the balance sheet, the asset side. That's what he's doing by raising additional capital. On the debt side of the balance sheet, he's raising convertible notes. And now in equities, like the equities guys, how do I say this politely? The equities guys think, they're the rock stars, and it's like, they're not the rock stars. In the finance world, it's all about the debt markets. The debt markets run the world. And the pool of capital, the depth, the breadth, basically everything runs on debt in our system. And, I don't need to talk to you about, what a fractional reserve banking system looks like and then the layers on top of it. But, the equities guys are the nice, shiny Hollywood types with the pop collars. And then the debt guys are the grunt guys that actually make things work and are the decision makers. And all you need to look at is, who Goldman Sachs has appointed basically head of their business for, the last 20 or 30 years. Typically, it's been a debt side guy rather than an asset equity side guy. That said, when we get to the debt side of things, this is where it gets really interesting for me, is the debt, like the bond markets have been starved of a real return for the last, since the GFC, for 20 years. So they don't have an ability to get a real return on their capital. They're getting a nominal return, but they're losing money. So they're getting debased and they're suffering inflation. And my expectation is if we look at real numbers, not the numbers that they tell us it is, my expectation is they need to get at least a 15% return net of tax just to break even. And they're not getting that. They're nowhere near that. And so there's a $300 trillion pool of capital with negative real returns. And all of a sudden, Michael Saylor comes along and offers a convertible note which can access the bond market. And he's raised maybe, I don't know, $4 to $10 billion, I don't know, depending on the day where it's at. All of a sudden, these bonds are the best performing bonds in the world. You now have capital allocators of their own money. Some of the best bond managers in the world reside in Germany. They're just, for some reason, really, really good at it. Allianz is a huge announcement that you saw in the last bond issuance that Michael Saylor raised. He had, I think it was initially slated for a $1.6 billion convertible note that got increased to $2.5 billion, and Allianz took 20% of that entire issuance. Excuse me. Now, all of a sudden, one of the most conservative bond managers on earth, they're running their own capital, have invested in a convertible note at a 0% coupon. So he's raising money and they're not even charging him an interest rate to give him money. This is the mind-blowing thing. I'm like, oh my God, like one of my craziest thoughts that I've given to the world is that my expectation is within 10 years, the banks are going to pay you to borrow money with your Bitcoin if you have that as collateral. I'm fully expecting to go to the bank and $10 million Bitcoin, great, there it is, give me $1 million. Now, how much interest are you going to pay me for that $1 million that I'm borrowing? That will happen, I'm sure of it. But what's really sort of endearing about this story for me is that Michael Saylor is proving in real time what I forecast about 6 years ago, that this is going to become a reality. Because when he first started issuing, he was issuing at about 5-6%, cost of money. Now he's issuing at a 0% interest rate with a 55% premium on the stock. So what that means is they're giving him $2.5 billion for zero interest. I'm like, if I could find any lender on earth to lend me $2.5 billion at a 0% interest rate, I would love to take that too. And all he has to give up is stock 5 years into the future. Now, most people look at that, and TradFi looks at that and goes, oh, that's crazy. I wouldn't do that. Like, it's like, no worries, you don't have to do that. But, to coin a term from the toxic Bitcoiners, is they're going to have fun staying poor because these are the best performing bonds in the world. So these bonds have outperformed absolutely everything by the proverbial mile. And what this lines us up for is basically more issuance. And there is, we can hear in the distance this faint sucking sound. And what it is Michael Saylor with a vacuum cleaner that's just hoovering up billions of dollars at the moment from a $300 trillion bond market. And what we're going to see through time is those convertible note issuances, I believe, are going to get bigger and bigger and bigger and bigger and bigger to the point where he exhausts all demand for it. And guess what? They're printing dollars. So you're going to wait for the next 10, 15, 20 years for him to exhaust all demand in that convertible note market, because this is the only thing giving you a real return. So I sort of sit there and look at this and just think, oh my gosh, this stock is path dependent, I believe, to become the largest company on earth. And there's nothing anyone can do about it. Microsoft, Apple, Tesla, you name it. There's no one, because of the way that corporate balance sheet is structured, there is nothing anyone can do about stopping MicroStrategy becoming the largest company on earth.
Well, it makes total sense, and because we've been seeing it playing out for the last couple of months, yeah, and we can see it all kind of happening live, really, can't we? As he's issuing the stock, he's buying the Bitcoin, the company's going up, the shares going up, everything's just lining right up. And as you said about, if people don't want to look at it and they don't want to do it, they're going to end up staying poor. They're going to just get and end up on the sidelines. Yeah. Allianz, as you said, is moved in. They're one of the first big names to come in. Everybody's going to start looking at it now. Yeah. And
it's so funny the weight that Allianz holds in traditional finance. When I've spoken to a few friends and explained to them what Allianz did, it nearly broke their brain. It was, Allianz did what? And all of a sudden, it has now certified, rectified, whatever you want to call it, the strategy that Michael Saylor's doing. All of a sudden, traditional finance is now paying attention because Allianz, because they're known as really conservative, very good managers and custodians of money. And all of a sudden, they're doing this. at a 0% coupon when they can get a risk-free rate from the Federal Reserve at 4.5%. And this is the other really funny thing, is that it really is a matrix moment where you think that's air you're breathing. We have the risk-free rate of the world. The Federal Reserve of the US is issuing money at 4.5%, and Michael Saylor is raising money at 0% to buy Bitcoin. So, I mean, just on that alone, from a traditional finance perspective, should break people's brains. And this is one of the conversations that I love having with the TradFi guys, because everyone knows in TradFi land that, oh yeah, the reserve, not the Reserve Bank, the Federal Reserve is the risk-free capital of the world. That's our risk-free. And I was talking to a risk guy yesterday. He's talking about that, basically these treasuries have a vol of volatility of 4, which is very low. And MicroStrategy has a vol of 100 plus. And what that's telling us is that no, the Federal Reserve with their 4.5% is no longer the risk-free rate of the world, because the risk-free rate of the world gets rewarded with the lowest interest rate. And all of a sudden, what we're seeing is Michael Saylor now has the lowest cost of capital in the world. And if I take you back to an example of, who was the last person to really have a distinctive advantage for low cost of capital in traditional finance, was Jeff Bezos from about 2010 and onwards. He basically got the lowest cost of capital. He could outcompete anyone. He could outspend anyone. He, built logistics programs for basically an interest rate of less than 1%, because he could issue capital, and that was his cost of capital, was less than 1%. And this is the thing that most people don't understand, why I'm trying to sort of educate my clients for the long term, that if Bitcoin's the risk-free capital, the best collateral ever invented, just to compete in their traditional businesses that use debt, like property and business, with working capital expenses, things like that, they're going to have Bitcoin on their balance sheets in order to compete. Because if you don't have Bitcoin on your balance sheet, you're going to be paying a much higher interest rate for your money. And when cost of capital is absolutely critical in gaining a return and a profit on the business, if you don't have that, then you're at a complete disadvantage to your competitors who do. So it's really about survival now. But traditional finance hasn't figured that out yet. But they're going to figure it out probably in about the next 2 years, I think.
Yeah, yeah. Now that being said, thanks. That was a great explanation what you gave about how MicroStrategy is uh, implementing this strategy. Yeah, because it's an amazing strategy when you think about it. Yeah, and it's ballsy as well to try and do it and be the first one to do it. He got a lot of slack from it when he first announced what he was going to do, but you know, there's no stopping Bitcoin. And that's it. You
No.
can't stop Bitcoin. Once you have Bitcoin on your side, it's going to empower you more, and it's going to just keep on pushing you because the energy that's behind it, yeah, and the power that's behind it. But let's touch on a little bit. We were talking a little bit last week, and we were mentioned Bitcoin treasuries. You know this thing. I'm going to pull her up here now, right? I'm going to show
Please.
other companies, yeah, that are actually buying Bitcoin. Like, most people are realizing that there's only 3 companies out there at the moment. Yeah. Uh, MicroStrategy, MetaPlanet, and Semler Scientific. Yeah. But you can talk about this graph. Yeah. And let's share it with the audience. Yeah. Because I think they're going to be probably blown away when we share this here. Yeah. So let's go. Okay. So you can see it there. Yeah. Full screen.
Yeah.
So we can see here the companies, yeah, public listed companies. MicroStrategy is at the top here. Yeah, they're holding 423,650 Bitcoin. Yeah.
Mm-hmm.
Marathon Digital Holdings there is next. That's holding 40,000. Some big difference. Big difference. Yeah. Riot Platforms, which is a mining company, and so is Marathon Digital is a mining company. So these are mining companies that are mining Bitcoin, not selling the Bitcoin, and now they're holding the Bitcoin. Yeah. And these are even
Yeah.
I think at the moment modeling what MicroStrategy has been doing by raising more capital. Yeah, and doing these is it convertible notes that these are doing? to raise more capital?
I think they did issue a convertible, and they've issued at the market stock too.
All right, yeah. So do you want to explain a little bit about this, or do you want to even take control and go down with the screen and explain what's
Yeah,
going on here?
I I think what we're seeing here is the Bitcoinization of balance sheets across the world, and outside of, say, the top 10 holdings there really isn't a lot of companies holding a lot of Bitcoin. We've got MicroStrategy at 420,000, Marathon at 40,000. And then it goes down pretty quickly that, you've got Semler Scientific at 1,800, you know, top 20, Fold has 1,000. Like all of a sudden, like 1,000 Bitcoin in corporate land is really not a lot of Bitcoin. And this is the thing I find really quite interesting about this is that, and without sort of spending too much time on MicroStrategy, this is a strategy that's available for every company on earth. And if you can scroll down a little bit further, you've now got sort of 122 Bitcoin. Digital X is an Australian company. They've got a whole host on their balance sheet as well. And now you get down to companies like, who've got one Bitcoin on their balance sheet. I mean, we are so early in this. There are some early leaders. Michael Saylor, I don't think anyone will ever get close to him with what he's doing. If Microsoft and Apple and Nvidia tried to implement his strategy, what he's doing tomorrow, they still can't catch him because they can't get the cost of capital down to where he's at. And that's because his MicroStrategy and Saylor's stock is way more volatile. And because it's more volatile and volatile to the upside, he can get capital much cheaper than they can. So no one's really going to want to buy convertible notes for Microsoft or Apple when they can buy converts for MicroStrategy.
Yeah.
And this is where,
But that being said, the likes of Microsoft and Apple are sitting on a huge amount of liquidity. Yeah.
correct.
On their balance sheets. Like I think
Yes.
Apple's sitting on over 150 billion worth of liquidity.
Mm-hmm.
Microsoft is sitting on about 65 billion worth of liquidity. Yeah. So they could use that liquidity to come in and buy a lot of Bitcoin. Yeah. Now they probably wouldn't be able to catch MicroStrategy with what he has, but they can still come in and buy massive amounts of Bitcoin.
Yeah, they can. And this is where, if you look at it today, technically they could buy more than what Saylor's got, presuming they can get it at a decent price. But what Saylor's done with is circa 10 to $19 billion worth of purchases since October has really pumped the price up dramatically. So what happens when they come in with $60 billion of cash to buy more? Well, all of a sudden, that's going to push the price up to the next level. And this is where what we're seeing is the capital stack of the world is basically made up in an upside down triangle. And the first people to Bitcoin to put their money in were the cypherpunks who didn't have much. They created it, so they got a lot of that for effectively nothing. And I say that in inverted commas. They obviously did a lot, and they deserve everything they've got because they took huge risks. But then the next layers come in where there might be retail punters and hedge funds and some smaller, more dynamic companies. Now we're moving up that stack again. That we've, the launch of the ETFs this year basically opens up the entire capital stack, and we've got companies now that are making a business out of getting more Bitcoin. And I look at this and think we're now entering that stage of the stack where the next logical conclusion of adoption is going to come from nation states. And what's really interesting for me to think about with this is that you and I sadly have to buy Bitcoin for 100 cents on the dollar. Michael Saylor, when he issues stock and it's trading at a 2.5 times NAV or 3 times NAV, he gets to buy Bitcoin for 30 cents on his dollar. And when the nation states start buying anyone who's got a money printer, they get to buy Bitcoin for a 99.99% discount. So for less than a cent on the dollar. That makes it very hard to compete with for you and I. And what that's going to mean is a severe price appreciation because you're going to have nation states now competing for this. So I just look at this as just another step in the chain of global adoption.
Yeah. And something interesting here as well. We hear a lot about the ETFs, the American ETFs, which are the big ones, yeah. But if we have a look
Mm,
here as well, there's so many ETFs here that are on this list that are around the country that are starting to accumulate Bitcoin as well. Yeah. Uh,
hmm
Now they are smaller, but like in the end of the day, one Bitcoin is one Bitcoin, and that's coming off the market. That's coming off into stronger hands. Yeah. These corporations that are
hmm
buying Bitcoin, these have strong hands. These are holding this for 10, 20, 30, if not into the future. Yeah.
Yeah.
But it just shows, it was just a very interesting chart. And then we could have private companies here as well that are buying Bitcoin and hold Bitcoin. You know what I mean? Block one, 164,000 Bitcoin. Tether as well, USDT, they've got 82,000 Bitcoin. So it's just an interesting chart. Then we have
It's
governments on
truly
this as well.
remarkable. Truly remarkable. Like,
Governments,
I mean, what surprises me is how few companies have a huge exposure to Bitcoin. Like,
yeah,
look at the bottom of the rung, like Relay with 1.1 Bitcoin on their balance sheet, like San Antonio Elite Chiropractic with 1.1. I mean, these companies, are just, like for a lot of people have got personal stacks bigger than that. I just find it
I
quite
know.
quite amazing. There are so there's just such a misunderstanding of this, and this is where capitalizing your business with Bitcoin versus anything else makes sense, particularly if you don't need that money for an extended period of time. Um, it shores up the balance sheet, reduces your risk, and in time will give you the cheapest cost of capital.
Yeah, yeah. And like, and just to touch on that point that you said, some of these companies up here, we can see what their market cap is. Yeah. Some of
Mm,
these that hold like um, 20 Bitcoin. You can see this is all the market cap here. Yeah. So
hmm
that's a company, Wonderfy. Yeah. 121 million market cap, and they've got only 42 Bitcoin. Yeah, man, as I
hmm
said, there's men and women around the world that have 42 Bitcoin, and this is a company has a market cap. Imagine the work, the energy, the time, the effort, everything that they're putting in to have that market cap, and they've only got 42. Yeah, they need to these companies to seriously start ramping up their Bitcoin holdings, and when they do, but we can see that all these companies are going to start coming and accumulating more and more and more Bitcoin.
Yeah, and for someone who's been there and done it, you know what the path is. So you just assume that everyone's going to be logical and think like you. And I agree with you. I think it's just a matter of time before the rest of the world figures out that and then applies basically what you and I have done with our personal circumstances to their corporate balance sheets. That I think
Yeah.
is a real application. And I just think it's not a question of if that's going to happen. It's just a matter of when it's going to happen.
Yeah, that's what it's down to now. Yeah, just
Yeah.
when people start doing their homework and they put in the work and they put in the time to start learning about this, um, yeah, it's definitely going to be a tsunami. That's what I can see, a
Yeah.
tsunami of capital. Yeah, thank God
Mhm.
we're on the
And
ark
that,
already.
yeah, exactly right. So what happens if you're not? It's, to the point we made earlier, you should learn as quickly as you can what this is to protect yourself from what's coming.
Yeah, 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 definitely. Uh, so for next year, what can you see happening next year? Yeah, what can you see is going to happen in the market? Yeah, any insights that you can see that's going to be happening with, you know, uh, this talk out there that Middle East countries now are looking at starting to maybe accumulate Bitcoin and start buying Bitcoin and nation states. Yeah,
I think we're going to see that. I think what we're going to see is more so than anything from a mining perspective. I think the oil rich and gas rich countries are going to realize that it's a geopolitical risk in exporting energy. And if they have a way to monetize their gas without sending it offshore and they can leave that in their sovereign territory, they're going to do that. And this is where I look at, I have concern for, and this is where I'm thrilled that all of these miners are basically figuring out it's far easier to issue capital to mine Bitcoin than it is to set up energy and energy plants and basically Bitcoin miners to mine it. But we're going to see nation state adoption. If you look at the gas exports from Russia and the rest of it, they had pipelines blown up. When Bitcoin gets to a size that they can actually monetize their energy without shipping it offshore to Europe, there's no reason why they wouldn't do that. I know if I was Putin and I had energy resources and the ability to monetize it on my sovereign soil, I wouldn't ship it offshore. It's just that he's got too much gas, he can't monetize it. And this is where, if you look at the energy markets and how big they are, it's like a $10 billion a day market. Once that gets priced in Bitcoin, show's over. That to me is the biggest geopolitical thing that could happen. I think we're going to see that in the next 5 years, maybe 10 years tops, but we'll see in the next 5 years, and we're going to see companies start that. So the miners, I think, are on notice that that's going to be seen as a public utility that governments are going to want to provide for their citizens to have exposure to that. I think we're going to have massive investment from the US. That's going to set the agenda for the rest of the world, particularly all Western democracies are going to basically fall in line with whatever they decide. And now that we've gone from, or we're moving from a hostile regime to a supportive administration on Bitcoin, that's going to set the agenda for London, for Europe, for Australia, for the rest of the world. That's going to be wildly positive. You've got the strategic reserve, which should be kicking off sometime next year. That's slated for 1 million Bitcoins that's going to come into market. I expect them to get to work straight away on that and start by stopping selling the Bitcoin that they hold would be the first bit that they do. The other thing that I think gets something I'm working on and trying to bring to fruition, because it all starts with the US and everything's downstream of there, is start putting in place policies around the support and I guess engagement of policies which are going to promote Bitcoin. And by that, I mean, one of the policies that tax policies that I look at that I think this is a great way to get more capital to Bitcoin is in the US, they've got a 1031 capital gains tax exemption when you invest like for like. So if you buy a property and then you sell it, you don't have to pay capital gains tax if you use those profits to then go and buy another property, and you cycle through and you can build your portfolio for the next 30 years without any capital gains tax payable. What I think would be a huge initiative from the US government is what happens if they change like for like from like to Bitcoin. So any asset can be sold CGT free to go and buy Bitcoin. All of a sudden, anyone holding stocks, anyone holding property, anyone monetizing bonds or selling a business can basically plow all that money into Bitcoin CGT free. Now, if I understand Bitcoin to be what it is, which is, of strategic national importance to the US, then you want to have policies that are going to support local adoption and ownership of that. And what better way to do that than to drive Americans with a tax incentive, huge amounts of capital in there to do that. And then at the same time, there's a whole host of things you can do from a government perspective to support and build a framework of supporting that as the preferred capital that the US wants to support. So if you look at how they've looked at financial markets over the last 30 years, the number one asset that they wanted everyone to monetize and provide for and effectively subsidize has been housing in the US. They wanted everyone to own a house, so they basically suppressed the rates dramatically to make home ownership affordable. What happens if they apply that type of thinking to Bitcoin? All of a sudden, we're just not bullish enough. There are so many levers that they can pull with an administration that's supportive of Bitcoin that I'm looking at thinking, well, next year is just going to be, anything is possible. And this is where I think, from a price perspective, we're going to see, I think it surprises to the upside next year. And it'll be a lot of fun to watch. So I hope everyone's got their position set and just sort of sit back and enjoy the ride, because it's going to be wild.
Yeah, get the popcorn out and get ready.
Yeah.
Definitely. Yeah. Yeah, that's a great outlook there that you have on into the future. Yeah. But we can see it, man. You can see it. It makes total sense to us Bitcoiners that have done our work and understand what's really going on. Yeah. Um, let's maybe wrap it up, right? Okay. I don't normally ask people this about prices and things like that. Yeah, but since we're at
Mm.
the end of the year and this is December, I've decided to ask a few people, what do you think we're going to end at maybe this year and where we're going to go next year with the price?
Ah, End of this year, I think might end around 125 to 130. I think if that happens, that'll be a reasonably good year, despite well, be a great year. New all-time highs, finish the year on that. Wonderful. And then as for next year, oh my good, we're talking US dollars, right? So
Yeah, US dollars.
my expectation is we'll see somewhere between 400, yeah, 400 to a million, depending
Yeah.
on how parabolic, how hard that blows off at the top. I think we're going to see that sort of thing. Um, and then we might, who knows if we see a nation state with a money printer enter the market, then maybe that's a base case. It goes to $1 million, and that's where they, that's the floor they set. So um, then it comes down to a game theory of what do you do with your Bitcoin if you want to monetize it and sell some, because you're never going to get it back for less than $1 million if they've got a money printer and they've set the floor at 1 million.
Amazing, amazing. Yeah, well, that's
Yeah.
kind of what I'm seeing as well myself with all the data that we're looking at and everything. But it was amazing talking to you, Peter. Yeah, if anybody wants to get in touch with you and they want to get in touch, how would they get in touch with yourselves? Yeah, if they need any help.
The best way is probably through X at Peter BTC Advisor, or the website, thebitcoinadvisor.com, and that is advisor with an ER. Shoot us an email, book a meeting. There's a whole host of us ready to help you if you need any help or would like to have a chat about your self custody setup.
Okay, thanks a lot. And we have you back on the show maybe next year. And let's see if we hit those all-time highs. Yeah, and see how it goes.
It'll be
But
fun to
as I
see
said
if I
again,
how far how wrong I am on that. So
to be honest, it probably will be a lot more higher than what you said,
uh,
you know what I mean, next year from what we can see happening. But
uh,
sure, let's see what happens. We
fingers
don't want to
crossed.
create any FOMO here. Yeah, that's not what it's all about. But there's a tsunami of
Yeah,
capital coming, and there's a tsunami of companies and corporations coming, and then nation states are coming as well. So it's a tight squeeze, all them companies and corporations and everything fitting into 21 million.
yeah, and that pie doesn't grow. So therein lies the opportunity.
Yeah. Thank you. Thanks a lot. Bye bye.
Thanks so
Bye
much.
bye.
Great to see you.
Thanks.